Hey traders, checking in on the stock market today. So we have the FOMC leading to an FOMO reaction with bulls ripping to all-time highs, IWM leading the way. Uranium sector had a big day today. Metals are pulling back into the area I am interested in them in. And oil, top fishing, worked out. Let's look at it all. So we're keeping it simple. The S&P 500 futures chart keeps hitting the EMA 12 support and keeps ripping to higher highs. There was an uptrending resistance line that is breaking bull. So we're no longer watching that. We're just watching the higher lows and keeping it simple. We can say tomorrow that if the SPY bulls hold 460.83, the low of today, they keep complete control. I know a lot of people look at this chart and say, this is unsustainable. We're about to crash. This is a bubble. Maybe. But one thing we have to remember is bears don't just show up out of nowhere. There's no surprise attack and you blink and we're down 5%. Unless there's an overnight, black swan news event, bears show up with notable massive volume. So you can make a very simple plan and say the next time there is a high volume bear day, the next time we see a red day with more than 20-day average volume, which is what this orange line is, I will go bearish. I'll put my stop above the high at that point, and that'll be that. Because otherwise, you're going to be completely frustrated if you are trying to short the broader market when bears have been non-existent for week after week after week. Again, it's not some surprise trick. You see it coming. You see the volume. Don't fight blue sky bulls. It's fine to not be comfortable making bullish entries up here. That doesn't mean that you have to be going bearish up here. So higher low everyday pattern is our guide. The NASDAQ futures chart, 4-hour higher low, bull ripper, QQQ, daily, anything above the low of today, 388.48, will keep the bulls in complete control. How long can this move go? We can look back at previous history here. Multiple times this year, this same thing has happened. V-shape, look at this green everyday stretch that we had. Very similar to what we're seeing now. Yes, daily consolidation is due, and we will see daily consolidation, but unless there's massive bear volume, we're just going to be looking for higher lows. Pre-COVID, we had an insane run up. After the 2016 election, we had an insane run up. So this has happened many times in the last 4 or 5 years. It can keep grinding higher a lot longer than you think. We'll be scouting daily higher lows. We'll be watching for hourly back burners for first oversold conditions. The FOMC reaction today. And again, I personally, as a trader, I have never once listened to the conference and Powell or any chair of the Fed. I have never read. I have no idea what was said. It doesn't matter to me at all. What matters to me is the initial bullish reaction. And we had a clear 5-minute tightening range. So here's your low of the reaction, which held a double bottom at the low of the day, triple bottom. We then ripped to a new high, 5-minute higher low, lower high, higher low, bull break. We never lost 5-minute higher lows at any point once we double bottomed and ripped higher. This is one of the more convincing FOMC reactions that we've had recently, just as far as there was no choppy action. It was just 5-minute higher lows every period of consolidation. So again, daily consolidation will not surprise us the next time it happens, but if it does not come with significant bear volume, we scout a daily higher low and we let the uptrends be our guide, because right now we are in a monthly, weekly, daily uptrend. XLF, bulls have been doing a great job of playing defense. Yesterday, we have to break the low of the previous day to set a daily lower high. We were watching for a daily lower high to be set compared to 40.86. So yesterday the bears tried it. We failed to break support by 4 pennies. Today the bears tried it. We failed to break support by 1 penny. That's great defense. Bulls just buy the dip and defend that support. So there is no daily lower high being set at this point, and we're looking back up at the all-time high. 40.68, 40.86 are the only resistance levels. And we would have to see 40.17 break for a daily lower high to be set. So XLF bulls are keeping their control of the daily uptrend. XLV close at the high, keeping its bounce going. No sign of any weakness. Still no real daily consolidation since back at 126.55. So another name with a ton of space for a daily higher low to form. IWM, massive breakout. We've been talking about this one for a while, so really nice to see it play out. Both Lori and myself were just watching the 7-month tightening range and saying it's a shaken up soda can ready to go in one direction or the other. And once the broader market bulls set the monthly higher low and fear was alleviated a few weeks ago, we certainly favored the bull lean, and it is big time follow through. Tons of space for a daily higher low, blue sky breakout, and we'll scout hourly oversold conditions looking for a daily higher low the next time we top out. But IWM's leading the way to the upside, and our growth names are benefiting. ARKK, strong close, but still range bound on the weekly. So not going to lose sight that ARKK may give us a monthly equilibrium. There are growth names that are giving us monthly tightening ranges and growth names that are not. So ARKK is a tightening range still. NIO is going to be a tightening range. Anything under 55.13, a monthly lower high. TAN is not a tightening range. We're still under the all-time high, but we broke to the highest level that we've seen in a bunch of months. PLTR also broke bull. So again, you can distinguish individual names based on whether we have potential monthly equilibriums or we have broken resistance. Biotech sector, day number 3 of the breakout. Again, it is benefiting from IWM strength, all about 136.61. That is its weekly resistance level. If we reject, we have an equilibrium. If we break bull, it's a monthly bull break, and we would then look to 140.150 as the next level. But biotech sector catching a lot of momentum. And again, on names that have been breaking out, bulls are waiting to buy the dip that missed it. Bulls are waiting for a daily higher low in SPY and in SMH and in NVDA and in Tesla and in XBI. They're waiting for hourly oversold conditions and daily higher lows to get their chance at entries as bulls are keeping complete control. ARCB, so this was the one that we talked about for the shipping play with our former Chart Guys member and shipping expert giving a handful of tickers. And the takeaway for me, I exited before earnings 15% ago, but I don't regret that decision at all. I was locking in a 10% plus move, and I didn't feel like gambling on the earnings reaction. Congrats to those that held. But the big takeaway for me is recognizing 2 times this year a weekly cup and handle where a daily cup and handle forms on the weekly handle. And both broke out very significantly. So that now to me means next time you see this pattern in a bullish market environment, pay extra attention. It was already the reason that I was interested in ARCB, the technical setup in addition to the fundamental aspect of things. But now that it's 2 for 2, definitely is burned in my memory to scout that setup. And it's probably a fairly rare setup. I can't remember any time I've seen it before this year. But congrats to the bulls. I know a handful of you were in this name as well. Tesla, trying to squeeze shorts again. So Tesla is keeping the higher low everyday pattern. And shorts piled in the last couple of days. There's no doubt about that. We had the all-time high. We double topped at that level. And so what's happening here is some profit taking from bulls, absolutely, but that's shorts making entries as well. And then today we had 1152 support from yesterday, and look where we bounced off of 1152. That's bulls playing defense, and then the FOMC reaction, trying to squeeze shorts. 1225 is the only resistance in play here. We broke 1210. We hit a new all-time high at the end of the day, and bulls are attempting to squeeze new shorts, the shorts from the last couple of days. Have to get over 1225 for follow through. But again, it's just like SPY, where if we keep setting a higher low every single day, the bulls are going to keep absolute complete control. And NVDA is the same, higher low every single day, a little bit slower move today, a little bit more tired bulls it looks like. But again, higher low every day, keep it simple. That is our guide. IWM today had a stair step pattern. I generally don't like bearish stair steps on blue sky bulls, but we had a 5-minute higher low every single day, every single candle, and that broke at 237.70, and we then pulled back from that moment forward $1.50. So again, the play, the way that I like to do it, short when the pattern breaks, stop over the high, exit half as soon as I can be risk-free, and then I either exit the second half for an hourly high or low, or I eventually just stop out break even if I were attempting a swing trade. The dollar, not really giving us a whole lot of short-term direction here, chopping around sideways the last few days, keeping an eye on this rising wedge, because if my metals thesis is going to play out, this has to break bearish. The metals thesis is playing out with exactly what I want to see. The one missing piece of the puzzle will be a dollar bear break of this rising wedge, and then of course the metals breaking their weekly resistance. But gold gave us the bear break into weekly consolidation. So I am now looking to make some entries, scaling in to GLD will be what I use, and I will use 1721 as a stop. So just looking at GLD, scaling in, and my stop will be under 160. Might as well go under 160 because these levels are right at the same level. And just looking at gold, I have not made any entries yet, but I'm going to be looking tomorrow. We'll see how this hourly shapes up. Miners started weekly consolidation. Silver saw it next. Gold saw it last. There are clues in these metals and miners in both directions over this year, and I'm sure throughout time, that are very helpful. There were clues to go bearish on gold days ago. So silver, weekly consolidation, trying to set a higher low. I will look for SLV and GLD. Yes, I know PSLV is an instrument that people like more, but I go where there's more volume and more liquidity. It's just my style of trading. Miners scouting the higher low. Look at the miners. Bullish engulfing candle. We hit the highest price this week. So we hit the high of Monday. Neither of the metals came close to hitting their high of Monday. So the miners have led on the way down. They've led on the way up because they broke weekly resistance. Neither gold nor silver broke weekly resistance. The miners did. And now the miners are trying to lead the way back up again. Oil, we talked about the top fish. It wins for the bears. So again, you don't have to nail the top. You don't have to be scaling in and into bull strength and nail the top. You wait, you say, okay, this is a big enough pullback that I can anticipate a lower high is going to be the most likely scenario, and then it's a clear top fish. The risk here, obviously you're not going to nail the top entry, but at the top, the risk was 53 cents. Even if it's $1.53 for your risk, because you didn't nail the top, the reward at this point from 84.88 is $4 and whatever pennies. So multiple potential reward for the risk. Weekly consolidation underway, tons of space for a weekly high or low, but it's the most notable shift that's taken place in oil in months. Natural gas, we're still going to be scouting a daily lower high. Anything under 6064 for an aggressive bear looking for an entry. Crypto names continuing strong. MARA breakout continues. Bitcoin had a flush that liquidated some longs on the FOMC reaction instantly, and then a V-shaped bounce. And you can see MARA, there's that lower wick on the FOMC, straight into a 8% bounce over the next 2 hours. I traded MARA today, played this oversold bounce, saw the 5-minute RSI in the teens, and I was just watching Bitcoin. So I was staring at Bitcoin oversold on the 5 and 15-minute time frame. I made an MARA entry based on Bitcoin, and I entered Ethereum as well. So I was trading crypto and stocks on the Bitcoin bounce. And I made my first entry. Oh, I forget where. Should have looked at those numbers. But I made an initial scale in the low 59s, mid 59s perhaps. I would have entered one more if 59 broke. It didn't. I sold half on this initial bounce back up to 60.30. So at that point, my break even is about 58.70 or so. I put my stop at 58.99 under the low of the day at that point. And I recognized Bitcoin is likely to see one more little low before this bounce gets going. So I moved my stop back to break even. 58.69 is where my stop was. If I wanted to be aggressive, I would have re-entered my half position that I sold, so my break even would have been about 59. But I just let the half position play out, sold into the bounce in the upper 60s, 60, 65 perhaps, somewhere around there. and definitely left a lot on the table, but I wouldn't have been holding through the FOMC and all that reaction anyway, so I'm not going to look at this and say woulda, coulda, shoulda, because I'm not going to kid myself. I would not have held it through the FOMC and gambled on that coin flip. But I sold it and then focused on the ETH aspect of that bounce. But if you are trading these crypto names, you have to be watching Bitcoin, because Bitcoin dictated everything about this MARA play today. Another name I traded today, GME. So GME got our big bull break, but bulls used up all their momentum. I didn't buy the breakout. Why did I not buy the weekly breakout? I've been waiting for this pattern to tighten up and eventually break because it was not ideal conditions. Why was it not ideal conditions? Because we have gone straight from our low into that break with no daily consolidation. That's too extended for me. I don't like it because by the time we even got to weekly resistance, we had already gone a lot. We had already gone 38% with no daily consolidation. Granted, that's not a ton for GME, but I would have much preferred a rejection from resistance, another daily higher low, and then break. Again, we want these equilibriums to get as tight as possible before the breaks take place. But once we broke that 232 level on the weekly, you get 10 minutes of hype. Who's left to buy after that point? Nobody. People have been buying for 5 days. There's nobody left to buy. And so we then just faded and gave the entire move back. So unfortunately for me, that significantly shifts this setup. And we're going to look for a daily higher low, but now it's going to be about earnings in a couple of weeks. So AMC rejected from its resistance and is remaining range bound. But it too is going to have earnings next week dictate short term. So I don't love how it played out. But again, I didn't take the trade because it was not my ideal scenario. What I did do is play a bounce attempt, and this is being wrong and making money. So higher low every 5-minute candle, that pattern broke, 5-minute consolidation underway. Okay, I'm scouting 5-minute EMA 12, and I'm looking for a higher low. Because if this move is going to continue to put pressure on shorts, and again, rather than just a rocket ship up, bulls would have much preferred a stair-step pattern. Because what a stair-step pattern does is allows for bulls to buy dips and keep pressure on shorts and new shorts to enter. Every time we start 5-minute consolidation, there's some shorts making an entry. And then when you see a 5-minute higher high, anybody that just shorted is now underwater. And if they're a day trader, they're covering. And their covering is adding to that upward momentum. But this was just, like lighting a match. It's a big flare up, but then the match goes out. And you need that slow and steady uptrend for continued pressure on shorts. So what I wanted to see is a 5-minute higher low into continuation if this was going to be a multiple day kind of breakout move. So I made an entry on this pullback. First entry was upper 232s, looking for a 5-minute higher low. I would have entered one more if we kept dropping down into the mid 220s, but the bounce started to get going shortly after, and I exited half. Why did I exit half? Because I am just anticipating a 5-minute lower high to be the result of this bounce, at least initially. I was hoping it would be a big bounce and we get a 5-minute equilibrium that eventually breaks bull, but I can't assume that's going to happen. So I entered in the 230s. I probably exited half in the 238s, 232s to 238s. And at that point, I put a stop under the low of 230. And I am risk-free. Cannot lose on that trade. 5-minute downtrend confirms. I stop out. And I end up with maybe a quarter-day maker. Nothing huge, nothing significant, but that's me being wrong. And by using partial positions, I still make money by being wrong. Which is why I'm always scaling in and scaling out. Cannot suggest that enough to become a part of your game plan and trading style. It was a game changer for me personally, and what opened that door was fees being eliminated. I was not doing that when there were fees, because that would mean if I'm scaling in 2 orders and scaling out 2 orders, when I first started trading, that would have been like $32 in orders on one trade. But now it's free for us in the US. I'm sorry if you don't have free trades. It's the greatest thing that's ever happened to me as a trader. All right. Hope you're well. Bulls in control. Don't fight the bulls. You can hedge long portfolios. That absolutely makes sense. You can be uncomfortable going bullish. That absolutely makes sense. Don't try and short the markets every day. Bears have to show up with notable bear volume. They're not sneaky. Do good things. Lots of turkey tail mushrooms, medicinal benefits. Bonus benefit of using old wood for your beds. So in this bed we've got Brussels sprouts, cabbage, onions, and cilantro at the end. And what you have to do when you have a garden is you go and look every single day. The more you stay on top of it, the better it's going to be. Same with trading stocks in the stock market. And you just look at the plant and you can say, okay, I can clearly see that there are caterpillars eating this plant compared to the other plants. So then you go in and you look for the caterpillar and you find them. And there's just a bunch of these little guys all over. So if I had chickens, I would feed them to the chickens, but I don't. So I just chuck them. Goo goo.